This video is for educational and entertainment use only. The views in this video do not necessarily represent the views or life of Marlon Dixon.
All right, you guys. So welcome back to Duffle LO to sit down. And I've been telling you guys about the Fed rate hike. I told you about the foreclosures. I told you about the appreciation in the properties. I told you all this stuff is mixed together. I thought I had one article that I was going to tell you guys, but I actually had two. So let's get into those two articles so you guys can see. Let me share my screen. And this is the first article. First article right here. Is it time to fight the Fed? Uh-oh. This veteran strategist says the central bank won't risk a 20% drop in house prices and a 30% slide in stocks. So now if they raise the rates, I told you, when they raise the rates, everybody not going to be able to afford them houses, right? Because the rates is so high and everybody can't afford that. Not only that, you also got to mix in with the unemployment end. Not only that, you got to mix in the inventory because of the foreclosures that's going to hit the market. So the foreclosures is going to oversaturate the market, which would drop the house prices. But they said that the central bank won't risk that. Why they won't risk that, do you think? Because like I told y'all, they going to buy the properties. They going to buy them. To make sure that it doesn't drop, they're going to buy the properties from the banks. So the Fed is going to buy the properties from the other banks. Why? Because if all these properties hit the market at the same time, the price of houses is going to drop because the market is oversaturated. It has too much supply. So what they're going to do, which is the biggest ploy, we're going to make the people feel safe by us buying all those houses. Now we're going to make them affordable houses. This is the government paying the Fed because the Fed own the houses now. And the government going to pay them to have people live in those houses. What did they say about the future? You will own nothing and be happy. January 7th, 2 days ago. Let's get into the article. Critical information for the trading day. Look at him. We got, look, you see, he ready to box. Is you ready to box? Because he ready to box. Well, let's get into it. The bond bears have been in ascendance this week, even before the release of the latest minutes from the last Federal Open Market Committee meeting. The yield on the 10-year Treasury has jumped 23.7 basis points this week, the largest 4-day yield gain since June 5th, 2020. As the Fed minutes showed, discussion of a fast window of a wind down of its balance sheet alongside rising interest rates. So because they're going to start dumping stuff so fast, they dumping all the stuff because they getting the cash back. So they dumping the bonds, getting the cash back. So now they're going to be cash heavy. When they cash heavy, then all these foreclosures hit the market. Hey, we don't know what to do with this cash, but we don't want the housing prices to dip down. Hey, you guys want your housing prices to dip down and you lose all of the appreciated? No, we don't want that. Okay, well, it's okay if we go ahead and use this cash to buy it. Yeah, buy them up so my house won't go down. Easy, easy. Granted, this is a discussion for December 14th and 15th, though St. Louis Fed President James Bullard's comments on Thursday suggested the more aggressive stance outlined in the minutes was still very much current thinking. Oh, no, we still think about dumping them bonds real fast. Because what? If they tell me that we dumping the bonds real fast, you already have it in your head that they already said, we're going to dump them bonds real fast. But when the foreclosures hit the market so fast, and then they dumped them bonds so fast, so now they got cash, then they could just buy up all the houses. David Rosenberg, chief economist and strategist at Rosenberg Research and the former chief North American economist at Merrill Lynch, isn't buying the tough talk from the Fed. One should be skeptical of the Fed's forecast, given the poor track record, even though investors treat them and the dot plots and the FOMC minutes as gospel, he said. Dating back to 2012, the Fed's forecasts on rates have been correct 37% of the time. Accurate on core inflation 29% of the time. Accurate on unemployment 24% of the time. Look at that. They accurate on unemployment. I just told you. All these people quitting their jobs, but they saying that the unemployment at 3.9%. But 1.5% of the population just quit their jobs in November. So you telling me 2.4? 2.4% was we were just at 2.4% before November? Now we at 3.9? No, they not correct about them numbers. They statistics is for them. The Fed speak like I told you guys in the previous video. You You have to understand, this is why I'm starting to put the videos in order to show y'all, like, this is how they go. Always, once you hear this, go back. Start going back to the previous videos. The more you go over it, you're going to start understanding the videos. And accurate on real gross domestic product growth 17% of the time. They not even over 40% right. Not even 38%. The highest they got is 37. They barely right. And the Fed tends to be too bullish on growth, he adds. They study say, we're gonna grow, we're going, we're going, we're gonna grow, we're gonna grow, we're going. Where the money at? The country $1 trillion in debt still to y'all though. So how y'all trying to be bullish on growth when the country in $1 trillion worth of debt to y'all? They want people to keep on taking out the loans and getting all the money and paying them all the interest. Why? Because the more they talk about growth and the more people borrow money from them, the more indebted the US is to them. What I'm saying is that they say in the stock market, never to bet against the Fed, but in the bond market, I can definitely tell you that it is perfectly safe to say that you can bet against the Fed's forecasting ability, especially when it comes to the one thing the Fed can't actually control, which is the policy rate. But if they bought all them bonds and they sell all them bonds, maybe they can possibly tap in with that policy rate. Point to the flattening real consumer spending, housing passes peak, too much inventory, a record high trade deficit, and flattened down real business speaking, there is absolutely no impetus to domestic demand growth going forward, and yet the Fed continues to play the role of economic cheerleader. Grow. Let's grow, let's grow. All this messed up over there, but let's keep growing though. We're gonna keep growing though. They still partying in the light zone. That's what they doing. If the Fed were to hike to 1.75% next year, it would mean the possibility of a 20% decline in home values and a 30% slide in equity prices if there were a mean reversion in price to income ratios. Even now, both asset classes are overpriced by 15%. So houses is overpriced by 15%, which in the other article y'all seen, they said 14.6% appreciation that they got in 2020. So housing prices is 15% over what they actually really worth. And the stocks is 15% over what they actually really worth. So if both of these asset classes is 15% over what they really worth, if all that go back down to normal, where all that equity go? Equity going billions, probably trillions, probably $1 trillion or more of equity will disappear if they just correct. If they would have hiked the rates 1.75%, that's not even a lot. If they just go up a little bit, it's going to tank stuff. But they're going to be the ones that's going to buy it up. They already know they're going to be the ones that buy it up. Here go the chart right here. Total cryptocurrency value received by illicit address 2017 to 2021. Do you see this? The green is all this is scam. All this color green, that's all scam. This green is stolen funds. And the yellow is terrorism financing. And then this is the dark market, that little line right there that you can barely see. But do you see what most of it is? The black is the cyber criminal administrator, which just came out. Fraud shop is pink, but you can barely see any of that. But you see the scam. Look at the scam. You see these scams? See, they know how to play this game because they play in the game and they write in the game. If we get everybody to see how many crypto scams is happening, people won't be afraid of it. Once we make everybody afraid of it, because the cryptocurrency market is down right now, down in the red. It's a bloodbath. But at the same time, everything's on discount. But if they get you scared of the cryptocurrency because you're scared that it's going to be a scam because you're not doing your research into the companies like you should be doing, you won't buy. And if you won't buy, you won't make no money. So now look at this. Cryptocurrency crime reached a record 14 billion last year, according to a research company. That sounds like China. Chain analysis, with scammers taking 7.8 billion and outright theft of 3.2 billion. As a percent of all transactions, however, the company said crypto crime was at a record low since total values jumped 567%, but illicit activity rose by 79%. You need to know what the numbers mean. You have to know what the numbers mean. I can't tell y'all everything. I need y'all to, get hip with this, so you got to do it yourself. The U.S. created a surprisingly low 199,000 non-farm jobs in December, coming in well short of the consensus estimates, but the unemployment rate continued to slide, falling to 3.9% from 4.2%. They studied throwing these numbers out, and they studied throwing these percentages out, saying that, oh yeah, more people is employed. We just created 199,000 jobs for not the farmers, but for everybody. Who gonna work them though? They can create the jobs, don't mean that people actually working the jobs. So they thinking, oh, since we created the jobs and these jobs is here, we're gonna take them off the unemployment percentage. That's not how it works. The yield on the 10-year treasury picked up 1.76%. Oil, CL, 0.5% was trading around $80 a barrel amid the unrest and producers Kazakhstan and Libya. Biotech shares skyrocketed after Discovery collaborative deal with chemical company Merck, with up to $610 million in fees and milestones. GameStop up 7%. So you see the market is up. The market is up a little bit. These are the top tickers. Amazon down, Naked down, Nvidia down, Neo down, Tesla down. But GameStop is up, AMC is up, Alibaba is up, Apple is up a little bit. Novavax, that's probably got something to do with the vaccine. So as you guys can see, like I just told you guys, this is a lot of information that's is going each and every way. So trust me, I read this stuff every day, so I understand it. It goes all those ways. That's why when I be talking without showing people in my other videos, it seemed like I was talking in circles and going off on tangents. And no, this is why I was speaking like that, because that's how the information is given. That's how you have to conceive it and understand it. It's gonna seem like it's all over the place. You got to pick a little truth from here, a little truth from here, a little truth from here, put it together and see what you come up with. What I come up with, I explain. This is my opinion, and I tell you guys what I come up with. They're going to buy those houses because they're not going to let the price of those houses go down. They not. Why? Because if the price of those houses go down, guess what? The rich, the price of their houses is going to go down too. They're not going to let that happen. So that's why they're going to sell them bonds to buy the houses. You will own nothing and be happy in the future. Because if they keep on crashing like this and keep crashing, every time they crash it, they're going to be the savior. They once crashing it, but they're going to be the savior. So they're going to come in and buy all the property. If you can't afford the property, what you supposed to do? Then they raise the taxes on the property taxes, which now you got to pay your property tax. You got mortgage and your property taxes go up. Wages ain't going up. And if wages do go up, the price of products go up. So technically, you really stuck. They understand the game, though. Because they understand the game, this is why they plan it this way. This is all a ploy. You have to understand what's going on. So hopefully you guys learned something from this video. We're going to get ready to get into the next video. So like I said, prosper through adversity. Don't underestimate family, friends, lovers, enemies. Look objectively. No matter what city, state, or country is in, every hood is the same. And if nobody told you that they love you today, I'm going to tell it to you right now. I love you. And I love you guys. So thanks for making it to this far in the video. Like, share, subscribe, leave comments below. Hit me up for any of the books or the merchandise that you guys want. Follow my other channels because it's so much information that I literally have to just work on one channel at a time because I can't keep jumping from 50,000 different thoughts. I ain't trying to drive myself crazy, but I'm conceiving so much of this information and I'm able to bring it to you guys straight. That's why I want to show it to you so you can see what I see. And that's all I gotta say.
This video is for educational and entertainment use only. The views in this video do not necessarily represent the views or life of Marlon Dixon.